Hello, it's Vince Stanzione here. In this video, I'm going to go through 7 tips to trading Deriv accumulators. So what we'll do, we'll go through these tips and then we'll actually look at the live screen. Now, before we get started, the usual disclaimer, nothing here should be taken as investment advice. All trading carries risk. What I suggest you do is try with a demo account so you've got completely no risk. And then when you're ready to trade, just start with $1. Which you can do with accumulators, and that is $1 total risk, so you can't lose more than your stake. And you can basically go to app.deriv.com where you can actually try out accumulators. Nothing to download. You can do this on your phone, on your desktop. I'm using a desktop here just because it's a little bit bigger and easier to see. All right, we'll go back to that shortly, but for now, let's just scroll through these few tips. Now, in fact, these actually make good sense regardless what you're trading with Deriv, but I'm talking mainly about accumulators here. But let's start off with money management, and it's something that a lot of people get wrong. Let's say you're starting with $100 in your trading bank. Stick to maybe 3 to 5% maximum per trade. So say, for instance, with 100, you're not going to risk more than $3 or $5 per trade. Now, the good news with Deriv, you can trade that small. With some brokers, you can't. Now, as your bank goes up, you can obviously up that, so your 3% becomes worth more. And of course, if the bank goes down, it will come down. So what it's doing, it's giving you many opportunities rather than just saying, oh, I'm just going to put $50 or my whole $100 on one trade. It gives you plenty of chances to be wrong before you're right. So it doesn't have to be complicated with money management, but do have some sort of a money management in mind. And I say, with a relatively small account, start with 3 to 5%. Now, after a good or poor run, take a break. Now, nice thing about accumulators, they're open 24/7. They trade on the popular derived volatility indices. And what people do, either, they get so excited that they just keep on trading. And at the same time, if they've had a bad run, they're trying to catch their money back. Now, what you can do is have a daily profit target. So I don't know, say I'm starting with $1,000 account. I might say, right, $50 or $60 is my daily profit target. I make that target and then I move away, take a break. And same again with a loss. I might say, okay, I don't want to lose more than $30 in one day. And same again, you move away and take a break. Nice thing about accumulators, they're open 24/7. There are always opportunities. So don't think, oh yeah, I've missed it, because there isn't. They're continuously trading. But what you can do, as I say, there's many things in trading that you can't control. But one thing you can control is obviously your profit and loss from when you decide to take profits and when you decide to take a loss and sort of walk away. So that's something you can control. Use a trading system, and I'll show you a couple of ideas, and I've already done a video in the past where I show Bollinger Bands, which is a little trading system you can use, but it doesn't need to be complicated. In fact, the one that I'll show you in a few minutes is just a simple tick rule. So what you say is basically, I'm only going to hold the trade for 5 ticks. So literally you count 1, 2, 3, 4, 5, and that's where you take your profit if obviously it hasn't been stopped out during that period. And then you wait for the next round, and I'll show you this so it makes it a little bit clearer. But your rule might be you won't come in to a new round of trading until it's been going for 5 ticks, and you won't come in after 20 ticks. But again, I'll show you that in a second what I mean, because it's probably easier to explain. But what I want to say is that you can have very, very simple trading rules, and it could just be as simple as, like, basically I'll come in at this point, I'll exit at this point, and then, as I say, you're on to your next trade. Higher the growth rate, higher the chances of a stop out. Obviously, nothing comes for free. Now, with accumulators, you can have a growth rate of 1, 2, 3, 4, or 5%. 5% obviously grows much quicker, but there's also a risk that you will be, stopped out quicker as well. And again, I've shown that in previous videos. And when we go on to the actual trading screen, I'll just quickly go through that again as well, so you can just see exactly what I mean. You can also mix and match. You might have some trades where you trade with the higher growth, and then some trades you trade at lower growth. But as I say, there's nothing wrong with taking the higher growth, but be aware you're obviously taking more risk as well. A simple trading tool like a moving average or Bollinger Bands, and I've shown that in the past, and in fact when we go onto the screen I'll show you, because I'll just leave that on there already. And if you recall, if you've seen my previous video, what we're looking for with the Bollinger Band is we want the price to sort of stay as steady as possible. We want it to stay in between, and then when we start seeing becoming quite volatile, that's not a bad time for you to actually get out and take your profit. But I say I have a previous video where I go into Bollinger Bands a little bit more on accumulators, but there are plenty of tools on here. Accumulators is a new product, so we're still in the very early days of trading systems, and I think there'll be still many more things that we haven't discovered yet. Keep your emotions in check. I think this goes in part with the trading rule where I said basically about taking a break, or having a stop loss where you take your profits and a stop loss where you take your loss for the day. And I've seen this before where traders, even after a good run, they start becoming reckless, that they think they're on a roll and they can't do anything wrong, and that's actually not a good place to be. And then at the same time, after a bad run, I see a lot of people trying to double up and make catch up, and again you can be in the wrong emotional state. And I think it just comes back to there. It's just like, can't take a break and then come back. Now, my final little tip of the 7 tips is constant and never-ending improvement. As I said, this is still a relatively new product. There will be new tools and features which will continuously be added. And same with you as a trader. You're always developing. So if you find a system that's working for you, that's great. But of course, in the meantime, we can also look at new systems. For me, certainly, I like to try new things. Now, the way you try these new systems is with a demo account. And with Deriv, you get a $10,000 balance, and you can reset that. So during your test, if things don't go too well, you can obviously just reset that balance. And then when you're ready to trade, obviously you can trade with as little as $1. And of course you can have a demo account and a real money account. So let's say you've had a good day, and maybe, I don't know, you've made $200-300, and you think, okay, that's it for today, I'm happy. You don't use your real account anymore. And in the meantime, you might use your demo account to try some new ideas and test, which is then obviously without risking any money. All right, so that's my 7 little tips there. Again, if you haven't already tried accumulators, or you don't have an account, then you can just go to deriv.com and you can open a free demo account. So in the next section, we're actually going to look at a few of the items that I've just talked about. Okay, this section we're actually going to look at app.deriv.com, and I've just gone on to the accumulators, and we'll go through a few of the little tips, ideas that I spoke about in just earlier. All right, if you just click on here, the little arrow here, you can see all the previous returns, so how long the trades lasted before they stopped out. Now, if you remember, you can choose your growth rate. Higher the growth rate, obviously more growth, but also more risk. So if you look here, this is at 1%. You can see a lot of these trades went for a long time, 172, 100 trades. If we go up to 5%, you will see the numbers are much lower. Because obviously you're taking more risk, bigger return, but of course the more chance that you are of getting stopped out. Now you can still obviously see some relatively big numbers here as well, like 49, but it's different between 1%. So you know what I'm going to do? I'm going to go somewhere in the middle, which right now we've got there, which we've got 3%, right? So what I'm going to do, we've gone, if you look at the number ticking there, it's 5. I'm going to go buy. I'm going to go 1, 2, 3, 4, 5, sell. Okay, so do you remember what I said? Like a basic system can be only go into the trade when it's after 5 ticks, say, for instance. So for instance here, where you've got like 4 ticks, you wouldn't have gone into that particular trade. Those are ones that didn't last very long. So right now this current round is still running. And then what I did is, and you see it just went back to 0. So let's go again. 1, 2, 3, 4, 5, out. Okay, We've just done it and that again. So we're taking relatively small profits here, but we're taking them quite quickly. Now, of course, you say, well, why can't you just take it on 10 ticks, for instance? Of course, you can take it on 10. That means you're going to be making more, but we're also upping our risk. So I've just, as I said, I've just come up with 5. There's no reason why you don't come up with 7. You can see that's still ticking away. And then when do you get back into the trade is when the new round starts. So like it's just started there. And a lot of people will say, well, I'll wait for the first couple of ticks as well. So, okay, let's go. We just came in a touch late there. 2, 3, 4, 5. Actually, we just overstayed our welcome a little bit there, but we still came out. So if you click on here, you can actually see more details. So let's just analyze that last trade. So that duration was actually, it was 9 ticks, and that can go up to 75 ticks. And obviously there's always a buy and sell reference, so everything is audited. This is a demo account, but still it's exactly the same as if you were using a real account. So let's close that down again. And of course we can scroll between different percentages. So here we're at the 1%. Here we're at the 2%, and we can see what status we are in those particular trades. But as I say, for now, I think 3 is fairly good. We can actually, let's do 1 on 5. We'll do 1 on 5 because we should see fairly fast action on that. So that one's been running for 40 odd trades so far. And when you want it to restart, come on. Okay, see, it just gone back down to 0. So I'm going to go 1, 2, 3, 4, 5. Wait for 5 in, and then I'm going to go buy 1, 2, 3, and that one lost. Okay, you saw what happened there. It only went up to 9, but didn't get much chance. 5 again. Let's go. 1. Okay, we're going to take the profit on that one there. And that one won. But that is to say, you can go through various systems, but there's no hard and fast rule. And then, of course, in the previous videos, we talked about the Bollinger Bands as well. But the main, and often you can auto trade this as well. Sorry, I forgot all about that one as well. I've just been hitting that manually. But you see with the take profit, you can actually set where you want to take your profits. So say, for instance, I want to take my profit automatically at $40. I can do that. Personally, I still prefer to take it manually. But as I say, you can obviously set that to buy as well automatically. All right, so that's it on this video. As I say, be sure to check out some of the previous ones. I'll also do some more updates as well. As and when I spot some new ideas. But as I say, start off with the demo account, and then you can, as I say, start with as little as $1. All right, thanks for watching.